What's going on, traders? Today I will be going over a trade that I took on the crude oil, and I made $1,300 using the model which I will be going over next week after the daily buys video. So starting with the daily chart, first we have to identify the order flow. So clearly we are closing below the up close candles, which is indicating a bearish order flow. An order block is supporting the price action. We have a continuation purge, up close candles followed by closure below, and the narrative we will be using for this model is the daily internal range liquidity to external range liquidity. So here on the daily chart we have a tag of this fair value gap, an internal range liquidity, and we had a swing point formation inside that internal range liquidity, a run on the previous day high. And if you have noticed, we are having a shadow run, which is indicating that expansion candle will be having a small wick, so a shallow run on the previous day high and then an expansion candle. So on the daily chart we have our narrative: order flow is bearish, internal to external range liquidity, daily buys, a swing formation. Now we will go to the 1 hour time frame to search for a point of interest. So here on the hourly chart, we tap into that daily fair value gap, and we have the change in the state of delivery, which is indicating that the wick of the daily candle is printed, and we are shifting the state of the delivery to the downside. So first step, we had our daily buys, a change in the state of delivery. Now we need a point of interest to then trade the market maker sell model to the downside. And one thing more, now I will pull up the 4 hour chart to see if we are in an expansion candle relative to the 4 hour. So here we have a 22 candle reversal, a 2 a.m. expansion, and a 6 a.m. potential expansion. So the 6 a.m. created their small wick, and now it is expanding to the downside. So the next step we need is an hourly point of interest. So here we have an internal range liquidity pool, a fair value gap, and also we have an SMT divergence confirming our reversal. The crude oil made a lower low. This candle is not taking this candle's high, while on the gasoline chart we are taking that candle's high. So that means the crude oil is weaker. So we have our first step daily bias, a change in the state of delivery, an hourly point of interest. And now we will go to the aligned time frame, which is the 5 minute, and we will trade the market maker sell model. So here on the hourly chart, we are inside that hourly imbalance, that fair value gap. All we need is a change in the state of delivery to get on side with the distribution. I entered the next candle after the change in the state of delivery, stop loss above the body highs and targeting a strike to our objective. So with the next candle, we expanded to the downside, reaching our to our profit target or objective. So this was the trade breakdown. The execution will be shown on the right side. If you want more execution videos like this, let me know in the comment section, and I will be going over this specific model next week after the daily buys video. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.